Solana's biggest DeFi lender almost got wrecked. Then Binance stepped in. This is important because what is happening here, like we talked about before, is Solana kind of paused essentially the largest wallet on the network, which was a whale, to manipulate the network and keep it up and running. And now they're basically getting a bailout from Binance. This should have spelled disaster for Solana at the end of the day. And it's not because they fixed the problem that it's not happening. It's because they're getting a bailout, right? Solend's whale crisis rattled depositors and threatened to crash Solana. Can lending protocol recover? What happens? Excuse me. Let me get a drink of water here. Hold on. There's a lot of reading going on. You know what? No, I mean. All right. What happens when there is a multi-million-dollar margin call and no one picks up the phone? The eerie prospect threatened to become a nightmarish reality last week for Solend, Solana's second biggest decentralized finance outpost. Its single largest user, a wallet with 107 million in USDC, borrowed against 170 million in SOL collateral, was on the verge of liquidation and completely missing in action. Developers tried Reddit posts, on-chain messages, even Twitter memes, hoping to alert the anonymous account of its impending fate. The whale account needed to either pony up more collateral or reduce its position to ward off catastrophic on-chain liquidation that project lead says could crash Solend and maybe even Solana. At the end of the day, yeah, probably crash Solana. The frantic rush to save Solend exploded into a governance and power controversy that elicited accusations of DeFi hypocrisy on crypto Twitter and beyond. Ultimately, it was CeFi giant Binance who woke the whale. Solend's pseudonymous co-founder Reuter told CoinDesk. The world's largest crypto exchange delivered a message to the account on Reuter's behalf, saying, quote, "I'm sorry that this issue has caused concern in the Solana community and with the Solana team," end quote. The user emailed Reuter on June 21st, according to screenshots shared with CoinDesk. There's no hard feelings about the recent governance proposal. After established contact, the whale began redistributing its Solend bets into other Solana DeFi outposts like Mango Markets, ending the most acute crisis without a single cascading liquidation. The price of Solana has recovered enough to quiet all the chaos despite the heavy dose of momentary issues. Solend's liquidation debacle came, excuse me guys, hold on a sec. So one of the points that I wanted to bring up that I find extremely interesting is that this user seems to be tied into basically primarily focused on Binance for his trades and so on. So he wasn't even aware that this was going on from the DeFi perspective. So, okay. Solend's liquidation debacle came as turbulent crypto markets rattled DeFi protocols of all stripes, pushing decentralized governing bodies to make tough decisions that affect protocol users in lasting ways. I'm having trouble, guys. I got stuff in my throat. That can make for a messy cocktail in decentralized finance, programmatic smart contract code, devoid of human biases that might, say, prompt a banker to refuse a loan to a minority group is meant to be the immutable law of the land. Of course, reality is more complicated. Solend's crisis emerged because its protocol had set no limits on how big a borrower could be. The result, a single whale accounted for the vast majority of Solend's SOL collateral in USDC loans. That collateral was at risk of liquidation if the price of SOL fell too low. Solend's smart contracts automatically send liquidation sell orders to DEXs when the user collateral falls too low. They're pure programmatic. They don't holistically check to see if a trade will crash the markets or worse, the chain. While while billions of dollars in Solana traded hands every day, most of that action happens on centralized exchanges, not over the much more thinly traded DEXs where DeFi cousin Solend routes its trades. DEXs don't have enough liquidity to soak up the whale's dump, meaning Sol's price would crash perhaps 60 or 80% until buyers arbitraged it back up. That itself was a problem, Reuter said. Quote, it's such a crazy art arbitrage opportunity and liquidation opportunity that bots would just flock. That type of activity has crashed the entire Solana blockchain in the past. Solend was sure to take the brunt of the pain. It would be left with bad debt, a depleted treasury, and disenchanted user base. It's basically over for us, and our users will lose a ton of money, Reuter said, explaining that would happen if the smart contracts did what they were designed to do. We really have to do something now, he said, recalling the outreach effort. Bankers in traditional finance can address a comparable snafu with a margin call to clients whereby they lay out the stakes and explain the need for more collateral to secure a loan. After all, they know their counterparties' identities. The borrow is a phone call or email away. That's not the case with pseudonymous DeFi, though a handful of startups are working on inter-wallet messaging solutions, none of which Solend used. Unable to broadcast their message privately, Reuter took the plea for the whale's attention public on Twitter. This spooked users into pulling their money from Solend en masse, emptying the vaults much as would happen in a bank run. Reuter admits the tweets backfired. It kind of exacerbated our problems because then not only were we dealing with a risk that something might happen, but we were dealing with an immediate problem that people's funds were frozen. Their solution was a controversial proposal to grant Solend Labs emergency powers over the whale's collateral. Once in control, the caretaker company would gracefully liquidate the whale via off-chain over-the-counter trading desks and in effect sidestep the market 0 day. It would turn the USDC back over to the whale, resolve the crisis, and right the markets. That said, it would overrule the smart contracts designed to be in control, and that's where optics became painful. Many DeFi protocols put code changes up to the community. Their token holders get to vote on new listings, rate hikes, partnerships, that sort of thing. The bigger the user's token trove, the weightier its opinion. It's an imperfect system for managing perpetually decentralized systems, albeit a popular one. Solend hadn't ever held a DAO vote before, but Reuter said it needed to put the controversial solution before the community. On June 19th, it proposed SLND1, the Emergency Powers Package. 6 hours later, the vote passed by 97.5% with just enough participation to meet a 1% quorum. Beneath Solend 1's apparent landslide was a less savory picture. A single wallet with 1.01% of the turnout tokens, a ballot whale if you will, made the difference. Without its participation, SLND1 would have failed to reach quorum and flopped on the technical. It only passed in the affirmative because it voted in the affirmative. Reuter said Solend's team asked the ballot whale to vote after fretting over Solend 1 low turnout. He said they did not ask the whale, who is active on Discord, to vote yes or no, only that they participate. The ballot whale obliged. Quote, users of the protocol have generally been very supportive, and then the critics tend to be like people on Twitter who have no stake or no deposits, Reuter said. This is true every single time, though. And that's because the people that are on the outside are saying, hold on, you guys are messing with stuff that you're not supposed to mess with. You're going against the principles. You're going against the code, the law, and we see it. And we're going to call it out. That's not necessarily like, obviously, like if people are investing, they're not going to want it to go down. So, of course, they're going to vote to save it. I think that MCT oil in that coffee got to me, guys. Ugh. The whale again basically swayed the whole vote, Reuter said. After a lot of hemming and hawing, the whale didn't want to act just to appease crypto Twitter's armchair experts, Reuter said. As well as tech hiccups, the ballot whale voted yes with 14 seconds to spare. A final June 21 vote on SLND3 saw the community approve what is effectively a new borrower ceiling at 50 million. This was designed to mitigate whale risk. It also passed with the ballot whale's critical yes vote. And this is fine. I think this one's perfectly fine. But anyways, you should have that in place beforehand, right? By this point, Reuter's parallel outreach effort had finally yielded fruit. Binance had gotten the borrower whale's attention, and they were in contact via email. Over the next couple days, the situation was slowly resolved. Binance declined to comment on the Solend situation. A spokesperson at the exchange confirmed it has been an intermediary between project teams and account holders in the past. The spokesperson said Binance never shares information without its users' permission. I would hope not. There's plenty of reputational damage. Observers from Solana's VC community told Coindesk they feared Solend had suffered an insurmountable setback with its series of governance votes. It is inertia versus terrible governance decision, said one researcher on Monday. He wasn't sure which force would win. Solend's total value locked, TVL, has dropped to 10% over the last week and nearly 60% in a month, while second-tier Solana DeFi lenders such as Rekt, Hubble, and Oxygen have fared far better. Mango Markets has gotten the lion's share of the whale redistribution. Speaking to CoinDesk last Friday, Reuter struck a hopeful tone. By then, Solend had steered through the crisis without suffering a catastrophic liquidation. I think this sentiment is kind of improving. I mean, the PR blowback has also blown over at this point. Solend lost a bunch of TVL, but people can use it now, Reuter said. So Solend remains the second biggest DeFi project on Solana. Solana just keeps having issues over and over again. And it all seems to be related to lack of preparation and lack of due diligence. And I get it. You can't really necessarily blame Solana for Solend, which is a separate DeFi project. This is just the nature of cryptocurrency, to be completely frank. But it's the type of people that are working within these projects that when you start to question exactly what's going on and I always have this issue with if you have extremely intelligent people building out these services, why are things a borrower ceiling not thought about ahead of time? Oh, maybe that would be a good idea. Maybe we should go ahead and do something with that, right? Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com, where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.